I want to speak frankly to everyone listening, and Ray, feel free to correct me if you think I'm off base. The harsh reality is that no one is going to rescue us. This is a truth we must face. Looking back at history and considering everything that's been said publicly on this matter, it's evident that we're in for some tough times. The kind of hardship many of us have never faced before is looming. Businesses will fail, jobs will be lost, and some people will struggle just to find their next meal. These cycles repeat throughout history, often for similar reasons, and typically occur once in a lifetime. Without understanding these historical patterns, we're bound to face difficulties. There's a recurring pattern in history, and we find ourselves at a specific point within this cycle. It's crucial to understand not just the history but the mechanisms behind these events to navigate them effectively. For instance, the debt crisis of 1929 to 1932 was triggered by excessive debt accumulated during boom years. When interest rates hit zero in 1932, similar to what happened in 2008, the central bank started printing money and purchasing financial assets. This happens when central banks can't stimulate the economy by lowering interest rates anymore. In 1932, as in 2008, they printed money to buy government bonds. This process essentially gives liquidity back to those who have lent money to the government. Governments can tax and spend, but they can't create money like central banks can. Conversely, central banks, such as the Federal Reserve, don't have the authority to decide how money is spent. That's the role of Congress. Every individual, company, and government operates on a balance of income, expenses, and savings. If income drops below expenses, they're in trouble unless they have adequate savings. Currently, many entities worldwide are facing this problem. The government, in response, prints money, mostly digitally, and this leads to loans. Essentially, they're creating digital money, which is then allocated to the government for distribution. The Federal Reserve buys government bonds in this process and may also buy private bonds, effectively lending money to companies. This has been a recurring theme in history. The current situation mirrors the 1930 to 1945 era, raising the question of how the average person, who might not be knowledgeable about bonds or even understand their 401k, can navigate these times. Do they simply try to weather the storm, or can they learn from history to better prepare themselves? The approach is universal, applicable to both individuals and companies. First, it's crucial to evaluate your income, expenses, and savings, and then conduct a stress test. This involves assessing your financial security should you lose your income or if it decreases significantly. Consider what steps you could take, like applying for unemployment insurance, and calculate how long you could maintain an acceptable lifestyle with your savings. Simplify your lifestyle if necessary and estimate how long your current earnings could sustain you. We should also look at historical instances where similar crises were handled well, resulting in minimal pain and suffering. A prime example is how President Roosevelt managed the situation post-1929. When interest rates hit zero, money was printed, and amidst a large wealth gap, measures were taken to maintain order and reform the system, whether through taxation or reorganization. However, there's also a risk of conflict during such downturns, as seen with Hitler's rise to power in 1933 Germany. This came about due to intense internal strife, with various groups like communists and fascists clashing over wealth distribution during hard economic times. This serves as a reminder of the broader risks that come with financial downturns. During that era, 4 democracies chose to abandon their democratic principles, seeking strong leaders to impose order amidst chaos. This led to the rise of authoritarian rulers and eventually, World War II. In such a tumultuous political landscape, it's crucial for the average person to focus on 3 key financial elements: income, expenses, and savings, and to formulate a robust plan, possibly with family involvement. Education plays a pivotal role in safeguarding future generations. My background was modest. My father was a jazz musician, and my mother, a homemaker. However, I was fortunate to receive a nurturing upbringing and a quality public school education, which opened doors to a world of equal opportunities. Education is not just about academic knowledge like reading, writing, and arithmetic, but also about learning to interact civilly and responsibly in society, preparing for the workforce. Work should ideally align with one's passion and be economically viable. Loving your work often leads to excelling at it. Education doesn't necessarily mean college. There's an overemphasis on college education when in fact, learning trades or other skills can be equally valuable. As we face the next 3 to 5 years of this economic cycle, one significant step people can take, based on historical insights, is to prepare for the worst-case scenario while aiming for the best. It's about learning how to effectively navigate challenges, finding your path, and understanding your strengths. Meditation has been instrumental for me. It reduces stress and enhances decision-making by fostering calmness and centeredness. Having a clear plan, seeking diverse perspectives for the best advice, and maintaining mental equilibrium are key strategies for coping with both emotional and financial challenges ahead. Please subscribe to the channel.